Hello everyone, my name is Alex, aka Uchiha Pips, and welcome to the second video of the Shark Hunter series. In the first video, we discussed how to do a top-down analysis to spot PD arrays, starting on the weekly chart and working our way down. In today's video, I will be introducing one of the two trading models covered in the Shark Hunter trading system, and is perhaps the easiest one to master. I call it the Blue Shark model. This trading model is specifically for the New York session, both AM and PM, but can also be used during Asia and London session. I like this model a lot because of how simple and effective it is without having to know too much about market algorithms. Also, it can provide two entry points. The first on the M5 with your market structure shift, and the second on the M1 when price re-enters the fair value gap of the market structure shift. Combined, on average, it's a 5-hour trade. Before every session, we need to have our chart ready by doing a top-down analysis. We'll start on the weekly and end on the M15. For this video, I'm only going to be backtesting 5 days. So I guess the previous week, it is Saturday. So I will start on Monday, which is right here. Go to our bar replay. What day is this? Alright, it's Friday. Cool. So we'll start on the weekly. And work our way down. So if you recall from the last video, we have an order of operations. An order of operations, when it comes to doing our technical analysis, starts with swing highs and swing lows, fair value gaps, and then order blocks. So first, we are going to do swing highs and swing lows. I just had to check and make sure. Alright, we've mapped out our swing highs and swing lows. Let's start looking for fair value gaps. And I do not see any fair value gap. I'm thinking this is an imbalance down here. Let's see if there's any space. We'll see whenever we get down there. It's marked. Next, order blocks. See this one. Okay, and this one hasn't formed yet, so we don't know. So there we go. This is our weekly chart. We mapped out the swing highs and lows. We looked for fair value gaps, but there aren't any, or imbalances yet. And now order blocks. And we mapped out this weekly order block right here. Okay, so now we're going to make our way down to the daily and do the exact same thing. Look for swing highs and swing lows. There. It's there. You can mark it's there, but Alright. Cell side major. Cell side major. And cell side major. Alright, next is fair value gaps and imbalances. I see quite a bit, so I'm gonna just start down here. We have this daily opening gap right here that was tested into. We'll say this fair value gap right here. Sorry for the planes and stuff flying by. Daily. This little block here. Not there. Alright, so daily fair value gap versus opening gap right here that has already been tested. What else do we have? So now this is where we're at. We have this opening gap right here. We have this opening gap right here. Okay. Now, yes, we also have these fair value gaps, but with such a run like this and leaving these opening gaps, I would think these are more precise areas to have as a draw on liquidity, because the range of these imbalanced candles, these impulse candles, pretty large. So to try to find an accurate entry for it is it'd be a little bit more difficult. But luckily we have these opening gaps, and they're called opening gaps because it's a gap between the close of the previous candle and the opening of the next candle. Alright, so we're just going to say OG here. OG daily. Or as a good buddy of mine would say, dog. I like OG daily though, because you know OG daily. All right, so got our. Let me put that up. And this is what I'm saying. Like, so in the previous week, we had this opening gap right here. And look, we just ran through it. So it's good that we have these opening gaps in between all this imbalance. Alright, so we have our swing highs, swing lows, fair value gaps and imbalances. Now we're looking for the order blocks. So we got this OB right here. This is an order block, yes. This is an order block. But they all will fall within like the same overlapping range, right? See? And we got this one right here. So if this order block doesn't hold, most likely it's gonna continue down and fill all the other order blocks. At least from my back testing. Alright, anyway. I'm gonna try to keep this video short because I've already had to re-record it. So anyway, alright, we got an order block there. What else we got? Got this order block here. There. This weekly order block, we're going to refine it down to the daily order block that's in here. So now we have our daily PD arrays. Okay. Have our range here, our daily range currently, since we're at all-time highs. And we have areas of interest. Points of interest are PDA arrays as magnets, basically. This. Okay. Now we go to the 4-hour chart. Let's see what we got. Swing highs, swing lows. Swing there. Swing over there. Alright, well that's immediately in our daily range. Right, so and you don't have to mark all of these out that are down here. You know, what I like to do is wait until we get down there and then I'll start marking them out. But I mainly just mark the immediate range that we're in, especially on the 4-hour chart. Okay, so that's that. Now we have this daily opening gap here, right? We don't really see anything that overlaps it, that makes it an opening gap on a lower time frame. We do have this imbalance right here, but I'm going to leave that there. Okay, we have this fair value gap, so I guess we'll do that. Yeah, that would make sense. Okay. So we'll say dog and H4 FG. Okay, and we'll do the same for this one over here. Daily open gap. Dog. H4 FEG. Alright. This fair value gap. Okay, and I'm going to refine this order block here down H4 block. Actually, let me double check and make sure this down here is not an order block. I can't tell. Let's see. Did it close lower? No, that's an upward candle. So that is not an order block. The way I'm telling is from the close of this candle and seeing the close of this candle, it is above the close of the previous candle, and so this is a bullish candle, so it's not a proper order block. This would be one right here because we broke structure right here. It gives us an imbalance along with it. Those are the order blocks I like to look for. Okay, H4 is done. Refresh our chart. Alright, I skipped the hourly. The H4 does enough. And then also with the 15-minute chart, you get the same thing as you would in the hourly. Alright, so swing highs and swing lows. We still have that swing high there. Swing low there. We have all of this. I'm just gonna say swing low right there, swing low right there. I'll mark that one. Alright, so we have a bunch. Okay. This is liquidity. Alright, so we did our swing highs and swing lows. Now we do our order blocks. Fair value gaps and imbalances. There's really none up here that hasn't been taken. The market has been pretty efficient and not producing any imbalances in this range right here. We do have this over here. Okay. Alright, that's the only fair value gap that I see that has not been tested. Let's say M15. Alright, and next is order blocks. Got this guy right here. We got a lot down here. I will mark this one. That one, get rid of this one. Yeah, you always want to keep your chart cleaned. So when you see like a group of the same PAs, you know, instead of trying to map out all of them, just map out the most important one around. Just map out the most important one, basically. We got stuff down here, but I'll mark that when we get down there. Okay, so sell side. Alright. Okay. So there's our M15. Okay, now that we have our PDA arrays mapped out, it's time to add a few indicators. First one is called Session Liquidity Tracker by Julian. It's a private indicator you won't find by searching for it in TradingView. To obtain it, click the link in the video description to be taken to the TradingView script page. And once you're there, it also has directions on how you can add it. But once you're there, add it to your favorites. It should appear in your indicators. If it doesn't, close TradingView and reopen it and check again. And it should be there. Now that have that out of the way, let's go ahead and add it. So I already have it, of course, but like I said, check the description and the link in the description and you add it to your favorites. So it's already in my favorites. Look for Session Range Highs and Lows by Julian. Boom. Okay. Now that we have the session liquidity tracker on our charts, we need to modify some of the settings and to add another session. So we'll go to settings. Make sure your time zone is correct. Right, I'm UTC -5 normally, but it's daylight savings, so I'm UTC -4 right now. London starts at midnight to 8 a.m. These aren't, there's so many different thoughts on when the actual range or when the actual sessions start. But I've found that these times work best for trading. So London starts at midnight to 8. New York AM 9 to 1, 9 a.m. to 1. New York PM 1 o'clock to, what is that, 7? Asia session 7 to midnight. And then session 5. This one right here is something that I've added. It's my own personal touch, and it's from 8 to 9. And what it does is map out the hour before the market New York AM starts, and it gives you the liquidity of that previous hour. So if we're thinking like open high, low close, right? And you want to scalp, like for that an hourly move or something like that, it's good to know the previous hour's range. And so this is why I have this. I have this previous hour range. All right, and do that session limit. I guess 25. That's how many that it marks out. Time frame, visibility, 30 minutes. Okay, so these are the session options. Make sure you have show sessions, hide current session, and extend unrated levels. You want to show rated levels. You do not want to extend rated levels. It will clutter up the chart. Show labels, show separator lines. I guess that's on by default. You can put on weekly dividers. I don't. You really want to keep your chart as clean as possible. It helps with thought process and thought flow. Let's see, alerts. This indicator has alerts where it alert you whenever price crosses over a session level. I have it on any. I don't really use the alerts on this, honestly, because I'm already looking at it. But let's say if you're not looking at it, this is good to let you know, like, hey, we've crossed the liquidity level. All right, FEG created after the raid session. This is cool. And say, so for the levels, I put on the previous day high and previous day low, and previous week high and previous week low. If you do your TA, you already will have it, right? But this it puts a label out, but it just stands out. This one also has the midnight open, weekly open, 9:30, 8:30. I don't have those. Leave those open. For the sake of this video, I won't talk about the midnight open. Let's go ahead and click show FEGs. You can extend the unmitigated FEGs to current bar, but again, you want to keep your chart clean. And if you already do your top-down analysis, you'll already have the fair value gaps that are your higher time frame fair value gaps. And they have the EQ line. People do all that. So anyway, what's important? Show the new week opening gaps. This is another reason why this indicator is so awesome, because it shows liquidity levels and the new week opening gaps. I have it to show 4. So the past months or past 4 weeks, which is good. You can show the new day opening gaps, but I have it off. You can track the market structure shift. I have this off too because we're going to add another indicator that's a lot better for tracking the market structure shifts. And so that's all we need to do for the session liquidity tracker. We're going to go click OK. And at this point, we're going to hide it by clicking the eyeball. The next indicator is central to the whole Shark Hunter trading system. It's It's called the Trader's Dynamic Index, or TDI. It's a part of the Beat the Market Maker model. But I won't go into too much detail on what the TDI is. You can check the link in the description for additional info of the TDI and the BTMM. For the shark hunter system, we will only be looking for shark fins and divergences. More on that in a little bit. So we need to search up for the RSI. So we go relative strength index. Okay. The RSI is the core of the TDI, and if you don't know what the RSI is, it measures momentum. So it measures the momentum of price, basically. Alright, so now that we have the RSI on here, we're going to have to add or change a couple of settings to get the TDI that we're looking for. So immediately we want to change the RSI length to 3. Alright, change the source to high, low, close 3. And we want to calculate divergences. The moving average, we want to change this to SMA plus Bollinger Bands. And change the length to 40. And standard deviation 1. Time frame as the chart. Wait for a time frame close. So we have the input settings here. Make sure it looks like this. And after that, we go to styles. We're going to take off the RSI base MA. RSI middle band. Sorry, those planes are busy today. RSI middle band. So first, what we're going to do is take off the RSI based MA. And then we're going to take out the RSI middle band. We're going to take off the RSI background fill color. And we're going to take off the Bollinger Band's background fill color. Okay. And we're going to change the RSI upper band to, 68. And the lower band to 32. Alright, so make sure it looks like this in your styles tab. Okay. Alright, click OK. And now we have this cool little tool down here. So let's take a look at what we just created. Alright, let's take note of these spikes that poke out of the Bollinger Bands. The RSI measures momentum, and the volatility bands, or the Bollinger Bands, measure the volatility range of price over a certain period. Okay, so if you notice, like when momentum breaks out of the bands, it will snap back into its average range. And so that's why it's called a shark fin, because it's like the fin is peaking up right before it goes back down, right? And it's hunting stuff. The shark fins coincide with liquidity grabs too, and so you'll notice that a lot in the silver shark model. They always go with liquidity grabs, but we're on the blue shark model today, and it's very similar, but you'll see what I mean later. So the last indicator that we're going to put on is called pivot highs and lows. It's optional, but it definitely makes trading this a lot easier because it do alerts and shows you the market structure in here. So we're going to go to indicators, look up pivot highs and lows by Muhammad 39. I'm going to click on that. Okay, and we're going to change some settings on here. I'm going to go to inputs, make sure the high is at 1. Well, first make sure this is high, right? Make it 1 1, and make sure this is low. Make this 1 1. For the options, I prefer to have all these off because I like having a clean chart. But you can click on show SR levels and extensions, and it will show you the swing levels. I'm gonna leave it off for right now because I don't like a cluttered up chart. Show levels as fractal channels. This is actually really cool, to be honest, because it gives you a channel. If it like breaks out of the channel, right? It's pretty cool. But I'm gonna leave it off right now. Show fractal breakout and down symbols. This is the one that you really need on right now, because it'll plot the arrows of the candles that break structure, and you'll need this because it gives you the signal for your entry. Okay, so boom, now we have all that all squared away. We got through all the boring stuff. We have our chart loaded up with the tools we need to trade the blue shark model. We'll turn on the session liquidity tracker again. Okay, this is Friday. All right, so let's go ahead and get started back testing. Okay, so this buy side major's already been taken. Right here, that's already been taken. Right, so we're just going to delete that. Okay. Now we are currently in the pre-hour. So we're going to wait for this to get done. There's that. All right, we have a shark fin here, right? We swept London's high, and we also swept the previous hour range. And so our market structure shift level would be right there. We also have a divergence right here. So immediately I'm looking for a price to close down into here. And when it does, that will be our entry. Okay, so there's our entry right there. I'll take a short entry right here. Stop loss at our swing high. And we're going to target 1 and 2. Alright, and what justifies our trade is we swept buy side liquidity in the form of session range highs. And more specifically for this one, like for Asia, London session took it out, and then for our pre-hour before the New York AM open, we took out London. And then we had a market structure shift to the downside with divergence of price still pushing higher but momentum going lower. That is our divergence. We would take that trade, one contract, one mini is what I would prefer. We're using 10, but it's equivalent to, we're using 10 micros, but it's equivalent to one mini, right? So trade there. And next we'll need to see if a fair value gap forms for our second entry. So go there, we have a fair value gap right there. Sell. Now the cool part, we'll go down to the 1 minute chart and see if there is a fair value gap or order block in or around this fair value gap on the M5. See if we can get another re-entry. And I see an order block right here. And fair value gap right here. It's actually a IFEG. So what I'm looking for is price to come back up into here, preferably tap into this order block and hit this IFEG, and then I look for a shark fin up top, and then a market structure shift will be my second entry. For the position size for the second entry is always going to be half of the original one. Okay, so I'll just wait to see if it comes back up in there. Doesn't look like it will. So boom. Alright, that's okay, because we bagged our 2R trade right there with very little drawdown, like right there. Okay, so let's move on to day 2, which would be Tuesday. See, we took out. Let's also clean up our chart as we go along. Took this out. Took this out. Took this out. Alright. Let's keep going. Your AM, your PM, Asia. London's about to be done. Okay. Let's go to our 5-minute chart. So let's do a little pre-session analysis here. I see order block. Let me map this whole thing here. So our swing highs up there. It's London high right there. Previous week high. So these indicators are already mapped out my buy side liquidity, so I don't have to sit there and draw it out manually. I see this fair value gap right here. It's now an imbalance that's left over. Not an order block. This is an order block. And this is an order block up here. Okay, so we have done a pre-session analysis here. Let's see what happens. Let's wait for, okay, so we have our previous hour range marked out. High here, low here. We have a PDA raise. And it's the high was just taken. Okay, we're up going into sell shark fin territory and preparing for a buy or a sell. Okay, we tapped into this imbalance order block in the new week opening gap area. Now we're looking for a market structure shift down. No IFEGs, none of that. Just a market structure shift down. There we go. We get a market structure shift down. See by this blue arrow. Add a point of interest, right? Just confluences on confluences on confluences. Boom. There's our break of structure right there. So we will take this trade. This one high. Make sure we get in there. We have things to justify this trade. We have sell side liquidity down here. We just rejected off the new week opening gap, mitigated an order block, all of that, right? And it looks like we swept Asia's high over here as well. Wick, so confluences 2R. Okay, let's see if we get a fair value gap. We do. We get one right there. So we have our first entry in. Now we'll go down to the 1 minute, see if we can get another re-entry in this zone over here. It's fair value gap. So I'm going to refine it a little bit more. I'm actually going to clean up my chart. Get rid of that. Get rid of that. Alright, so we have this fair value gap up here. We have this order block right here. So this is perfect. This is perfect. Alright, so what I'm looking for is price to come into this fair value gap, tap into this order block, and give us a market structure shift down for our second entry on the 1 minute chart. So let's see what we get. Alright, we're already up in there. Tapping that order block. Okay, so there's a inverse fair value gap, but we don't take those in this model. Just looking for a break of structure down. Re-tap that order block. It's holding. Just need a break of structure. There we go. There it is, right there. We got our short position. Previous swing high. And we will target the same profit level as our 5 minute. and as you can see, it raises the, obviously I can actually put it up here. It raises your R. So initially it's a 2R trade, right? But then your re-entry, is normally like 3 or 4 to 6 additional R. So this is another reason why this strategy is awesome, especially on days where like it's just really choppy. This will keep you from over trading. Alright, so we do our second entry here, 5 at half, the position size, boom. Our stop loss is right here, TP down here. Let's see what happens. TP smashed. Yeah. Okay, so let's move on to the next day. There we go. So we have our London high here, London low here. This imbalance right here. Alright, let's see what's up. Wait for the pre-hour to end. There we go. Let's see what we get here. Alright, just taking out the highs. I'm drawing up here. So we don't take this one because it's already so far away from swing point, and we want to sell in premium and buy in discount. So just because you finally get an arrow down here and it breaks structure, that does not mean you get in on it. Right, so next, so we're just taking the lows. Alright, boom. Okay, well there's our break of structure right here, market structure shift. So after we swept previous session liquidity, so 10, okay, buy, stop loss, previous swing low, TP up here. Alright, let's see if we get a fair value gap. We do not. So this one just rides. Alright, TP hit. Wednesday. Okay, so now let's go to Thursday. See, we've taken out both sides of Asia's range. But the most recent thing we did was sweep London's high, or Asia's high. Okay. Alright, so what I see is we swept the previous hour's low, okay, into this order block right here. but get a market structure shift and see we're already too far up from too high up in this range, so if we get one I won't even be mad to not take it, to be honest. It's too far. Yeah, and it would just been trending up like that. Nah. Look at all that engineered liquidity, that right there, and this isn't even an order block, so this looks like a trap, to be honest. Alright, so we have a sell shark fin area right here. Let's see, what else do we have here? We got this order block that got mitigated with this wick. So the next one we got is, no, it's not one either. So we got these highs. The last thing we did was take out previous Asia's high, and it looks like it's trying to go up higher, but we'll see. Ooh, joke's on you. So that is actually market structure shift right there. I'm going to take it. Wow, this is a big trade. Okay, and mainly because I'm taking it because we broke a lot of structure and we just made this breaker block right here. So although we didn't sweep the previous hour range, London session did sweep Asia's high, and then we just created a breaker block down. And so for me, that's a confluence. I'm gonna see if we get an order block here or a fair value gap. Yeah, we get one right there. Let's see if we go back up in it. Yeah, looks like we did. Miss it? Yep. Looks like I did. Yeah, we came up in here. But honestly, I wouldn't have taken that. It's too far down. Let's see if it comes back up. Yeah, there we go. That's more like it. So, reaching up into this fair value gap up here in the extreme is preferable for me. I would like to see if we can get a market structure shift down, and it looks like we did right there. Double lows break, you know, we got an arrow right there, so there's our second entry. 5, sell. Oh, did I not do my first one? Let's go back. Alright, so I'll put my initial sell right here. It's a little late, but stop loss up there. TP down there. I got the 1 minute. We're gonna find this order block. I'm just gonna get rid of that. And here's our breaker. So getting into this fair value gap in the breaker block area is really good. So we'll keep going. Let's up there. Get our market structure shift, and we go in with our second entry at half size. Boom. And then, yeah, that's it. We just let it ride, right? This trade would be 3.5R. So on average, you know, it's 5R. This is 2R. So it does take longer than trading on the 1 minute chart, like scalping macros in the Silver Shark model, but so this will pass your eval and get you paid. I will say that, and you won't have to worry about over trading. Just as long as, you know, when you go in for your second position size, you use half. Let's see, what day was this? This was Thursday. All right, let's go to the last day, Friday. Okay, London session has ended, and now we're going to do our pre-session analysis. So I see this order block right here. Alright, looks like we just tapped into it as well. I see an order block down here. Okay, we got fair value gap right there. Alright, so I see divergence right here. Looks like we swept the high, this high, into this order block. Got our divergences right there too. Okay. Let's see what we get. Alright, break structure there. After a divergence into an order block, pretty solid to me. I want to be safe and put it up above this order block. All right, 1, 2. Let's see if we get a fair value gap in there. We do. Right there. Alright, we got an order block right there. That fair value gap right there. So we want price to come tap in to this order block and FEG give us another re-entry down. So I need to put in my sell for the M5 entry. Stop loss above there, TP right there, 2R, and let's see if we get back up in there. Oh, we wicked up in there. Didn't touch the order block. It doesn't look like we're coming back up. Alright, TP smashed. So not every day you'll get a double entry, right? But it's okay, because you're still back 2R. Well, it's getting loud around here, so I hope you enjoyed the video. If you have any questions, please reach out to me in the Discord channel any way that you can contact me. Alright, hope you have a great weekend. Later.